And this now has put the London market in a vice, where this market of digital metal, of kind of comfort contracts that, oh yeah, I have a contract here and I can demand it any time, that it's the veil is being lifted on it, and it doesn't look very good what we see underneath the veil in terms of the value of these contracts, because it's becoming readily apparent. There's billions of ounces of claims in the London cash market, and yet we had zero liquidity on Friday. That to me is the astounding part, Mario, is that it's very clear now that there is not metal to deliver into these contracts, just with a tick up in demand for physical in London.
Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with David Jensen. David is a precious metals mining executive. He's also a very good analyst of the precious metals market, especially as it concerns the London Bullion Market Association, or the LBMA. And David, I was telling you before we started here that I've created a playlist on my YouTube channel, and it's called David Jensen on the LBMA. And you were surprised, but we've done 8 interviews. The first one was on September 21st, 2024. And I'll just go through some of the titles because I think it's really relevant now with what's going on in the silver market. The first one we did, I entitled it, The London Bullion Market Has Sent Gold and Silver Supply to the Moon. The second one we did in January this year, David, is entitled London Silver Market Verges on Silver Delivery Default, says David Jensen. And so on. I'll stop right here. I don't have to go through all of them. But yeah, so David, welcome back to the channel. It's always great to speak with you.
Well, thank you, Mario. It's great to talk again.
David, yeah, so as I said, we've spoken a lot about the LBMA and what goes on there, and the fact that it's a thinly regulated market. It has been around since the Big Bang in 1987. So maybe you could give, even though we've spoken about this, I'm sure there's a lot of new viewers out there and a lot of new people who are wondering what's going on in the silver market. If you could give them like a little bit of history and background on the LBMA, and in particular, I mean, silver, if you want to talk about gold as well.
Yeah. Okay. I mean, the LBMA is a market association, which was set up and it was incorporated in December 1987, after the 1986 Big Bang financial market reform regulation from the Thatcher government. And what that legislation did was it handed over oversight of the world's largest physical gold and silver market in London. It gave it to the Bank of England, who are the currency printers. And essentially, why that's important is that gold and silver throughout the 1970s had acted as a warning system of excessively loose currency policy by the currency creators, or the money printers, as they're loosely referred to. Money is gold and silver, so you can't print money. But anyways, it's a misstatement. Anyway, so Robert Guy, who was a bullion trader for Rothschild Bank, essentially was given the task of creating the founding documents of the LBMA and setting the standards for what they're trading and how they act, with the oversight of the Bank of England. So what we see is essentially that the money printers, or the currency printers, took over the warning system of the gold and silver market, and what they created was a system which could not have proper gold and silver price discovery, because they were trading, instead of allocated and segregated gold and silver bars and vaults, they started trading what are these promissory notes, which are promises to deliver metal on demand to the holder of these notes. And so when we look at the market big picture, what it did essentially was it made a one-way bet that investors would be happy holding promissory notes in the London market in lieu of actually having the bars in hand. And the one-way bet is a bet that this would be the situation forever. And what you can just having a very removed look at this in terms of from a distance is you can see that would be a very, very bad bet to make, that this had to always be the situation. And the promissory notes that they have in London, there's hundreds of ounces of claims on these promissory notes versus the metal that's actually available for delivery. And we did hear at the end of last week that there was zero silver liquidity in London, so no metal availability. And that drove the overnight lease rate to 200% in the silver market. So as you could, just by inspection at the founding point of the LBMA predict, or of the London gold and silver market overseen by the LBMA, what you would ultimately predicted then is that that system would fail, and the system is in and out of failure now in terms of not being able to source adequate metal to cover the small portion of the promissory notes who are actually asking for delivery now.
Yeah, so the LBMA has been a mechanism for trading gold and silver, pretty much like a fractional reserve fiat currency contract, right?
Yeah,
Yeah, and so it doesn't really matter when the LBMA, I guess, says that a contract is allocated or unallocated because it doesn't seem like they have anything there, right?
that's correct.
Yeah, yeah. So, I mean, when did you realize that this was so? Have you been? I mean, we've been talking for over a year about this, but have you always known this, or did it take you a while to realize what was going on? Because it's very difficult to prove these things
Yeah.
because you get the officials from the LBMA, the bullion bankers, they say these people are conspiracy theorists. They don't know what they're talking about.
Mhm.
We know about a lot of analysts out there who say that, right? It's
Mhm.
almost as if uh, they uh, they think that their fictitious system is a system. And it's weird that they say, oh, liquidity has dried up, but they've never traded any physical. So, yeah, what do you say to them?
Well, I mean, what we can see now in retrospect is that theorists in air quotes just ended up being data analysts and people that read documents from the exchanges. I mean, I started initially reading the documents probably about the 2007, 2006, 2007 timeframe. And I saw in the documents from the LBMA the description of these unallocated accounts, and the note in there that the holders of these contracts were unsecured creditors. And that jolted me. It does take some time to digest it and understand the full meaning in terms of, what do you have then, right? Because a futures contract is a promise and a spot contract is a promise, and it takes a little while to put it all together. I mean, I started looking at the market back in 2000, 2001 timeframe, but it's a gradual process of understanding and kind of winnowing out what's important and what's not, because there was gathered important work back then in terms of raising awareness that the market wasn't trading fairly. As did John Embry, by the way, from Toronto, who promptly got fired from his job as a bank precious metals analyst.
I
Uh,
remember him. Wasn't he Sprott, John Embry?
Eric Sprott, hired him immediately when he got fired.
Who did he used to work for before that?
I think it was RBC,
Oh, I see. I see. And so he was trying to expose the LBMA, was he?
right? And he got a little bit too truthy.
I see.
And so Eric Sprott stepped in, like I think it was the next week, and that really that I think that was like the 2002 time frame, but that really resonated in the markets, in the gold and silver markets, as like holy cow, this guy got fired, and then holy cow, this guy got hired. It was a a signal sent by Eric um, to the market that I have room for a truth teller in my organization, right? It's a wonderful thing. So, but anyway, so the net of it all is that we now, Mary, we have enough individuals and funds and investors asking for the metal, and they're not. It's not enough to hold these magic beans that are produced in London, and it's causing incredible um, duress and stress in the London market, and it's knocked into all of the global silver markets because all of a sudden we can see that the world's most important gold and silver market has zero liquidity as of last Friday. And now there's theories that this is going to be solved, right? But it's not being solved. The claims are that there's some kind of a cavalry of uninformed silver holders that that hold hundreds of millions of ounces in New York vaults that are going to ride to the rescue of the London market. But when you look at the data of the 530 million ounces held in New York vaults, that has declined by less than 15 million ounces. So, of the order of a couple of percent drawdown in the silver vault holdings in New York. So, understanding that there's billions with a B of ounces of claims for physical silver bars in the cash market in London, you can see that this is an insoluble situation. Number one is that the scale is so large. And number two, that these investors that are holding their metal in the New York vaults actually appear to be well informed. I don't believe it was purely a Trump tariff issue. I think that there was a portion of individuals who understood the risk of holding these promissory notes in London, and that metal was moved to New York for safekeeping. So nobody knows exactly what individuals are thinking, despite the fact that they say so in the press in general. They know every day why metals go up and down. They come up with a single line as to why they're selling, such as profit taking. Well, I don't know. There are many reasons that people sell. So we'll leave that at that. But there is no uninformed cavalry of hundreds of millions of ounces of silver that's going to ride to the rescue of London, because they can't come to the rescue of London because they don't have the metal. And as these holders of these promissory notes in the cash market increasingly ask for delivery, the problem compounds very quickly. And we can see that in the fact that the cash price in New York and the cash price in London in the last few days has been more than $3 higher than all of the future contracts going out to a year. And that the signal that I'm taking from that, my interpretation of that signal, is that the futures market is becoming increasingly irrelevant as these contract holders are asking for bars in hand. And that is the kryptonite for the London promissory note market. And there's a couple of other things that we can note here too, Mario. Is like, for instance, right now, the insane trading volume in New York. We're halfway through the trading day, and they've already matched yesterday's trading volume, which was exceedingly high. So we're already near 170,000 contracts in the market trading.
Is that for the December contract on Comex or?
Yeah, December rate now is
Yeah.
157, but all of them together are all of the various months are around 170,000.
Yeah, I was looking the other day at the volume on the October contract because that's a deliverable month.
Yep.
And you would think that if the guys in London wanted the physical metal, they'd be buying a lot of that and taking delivery right
Hmm.
now. But I didn't see much volume in that contract. I mean, there's a
No.
lot in December, but you'd have to wait till December to take delivery. So, because there's a
Yeah.
lot of people saying, oh, New York, the COMEX silver in New York or the silver in New York is going to flow into London and it's going to solve the
Yeah.
problem. But can
Well, and
you?
there's even a contra indicator to that, Mario, is that the exchange for physical contracts, the EFPs, which are when you take a futures contract, you can use an EFP to purchase a London delivery contract, and there's been 25 million ounces of that since last Monday that have been created in the New York market. So it may be that even instead of New York solving London's problem, that New York is compounding London's problem. Um, in that these EFPs, if they stand for physical delivery in London, that they will draw out more silver liquidity than we've seen in terms of the drawdown of the New York vaults. And the amount I mentioned, it was less than 15 million ounces now over the last couple of weeks that's been drawn, the last 3 weeks that have been drawn down. We don't know if that's going to London even. So it may just be going to private vaults or to industrial users. We don't know that. So the idea, the story that this silver is going to, the New York Silver Vault stock is going to solve London's problem. I don't think we see support from that in data, and that in fact that it appears that it may be getting more intense in London.
Yeah, no, that's right. And um, concerning like the price of silver, for example, do you think it's had an impact, the fact that we're approaching that 50 level, that is historically has been like a top in 1980 and 2011. Do you think that's encouraged people to actually take delivery of real physical silver? Or do you think that's something else that's triggering this physical demand? I mean, it could be related to, I mean, we've heard, David, in the last few years that there's a silver deficit.
Hmm.
And maybe it's a combination of all that. And also in the mining space, there's very little primary silver producers, and there hasn't been a big silver find for a long time. And I mean, one of the biggest silver producers, right, is China, if I'm not mistaken, or is it just Mexico and Poland? Yeah.
Well, I mean, silver hit 53.50 last night in the cash market, right? And it's what is it,
Yeah, I
50?
mean,
It's
overnight
50.
for me in London, it was 53.77 actually.
Right. Okay. I
Yeah.
see 51.50.
Yeah,
So,
now it's 51.50. Yeah, that's right.
right. So it's not just approached $50, it's gone through it, right?
Yeah.
And so what I'm seeing from this, I think it's actually the opposite of the scenario that you mentioned there. I think that what's driving the price higher is the physical demand. I don't think the physical demand is being driven so much by the price. And I think the fact that the liquidity went to zero in London on Friday and the overnight lease rate went to 200% tells us that there's a very real crisis evolving in London. And underpinning this crisis is increased physical demand globally. We've had, I think, 6 or 7 years now of annual supply deficits in the silver market, totaling over 1 billion ounces. And over that period of time, there's been a bleeding away of the available silver in these 1,000 ounce bar forms that's readily available to market. And we've just got a problem that's that's been established over a period of time. It's chronic now. It's a chronic shortage of silver. It's not a temporary, oh, we just don't have the right metal in the right place, but it's a chronic supply shortage in the markets, whether it's in India, whether it's in New York, or whether it's in London. And the easily available bars of this physical metal have been consumed and have been taken into tighter hands. And this now has put the London market in a vice, where this market of digital metal, of kind of comfort contracts that, oh yeah, I have a contract here and I can demand it any time, that it's the veil is being lifted on it, and it doesn't look very good what we see underneath the veil in terms of the value of these contracts, because it's becoming readily apparent. There's billions of ounces of claims in the London cash market, and yet we had zero liquidity on Friday. That to me is the astounding part, Mario, is that it's very clear now that there is not metal to deliver into these contracts, just with a tick up in demand for physical in London.
Yeah.
And the availability was so thin. And you and I discussed this earlier, and in my Substack, I put a few articles in there that some had claimed there was 200 million ounces of free float silver available to market. And I had countered that by saying that I think there's maybe tens of millions of ounces. And we can see now that the latter is the case, in that the market has basically dried up. And now the scramble is to secure metal. And the refineries are going to have to pump out these bars to market. But the scale of production from the world's refineries that are producing of the order of 1 billion ounces a year, of silver, which is spoken for, and now to add on top of that capacity is a very difficult thing to do, and it takes time. It takes time for scrap to find its way to market and to be refined and to find its way above the current demand, in volume above the current demand, to find its way into the hands of the investors and the industrial users, at an adequate level of supply, especially when we have this, what has now been labeled the debasement trade, which is moving into real safe haven protective assets in the face of open debasement policy by the central banks. And excuse me, that stands, the most recent example we saw was the Fed lowering interest rates on September 17th, while the CPI, which is the inflation figure that they acknowledge, was 2.9% and starting to tick upwards, and markets were at an all-time high. And they said, well, you need looser money policy. And I think that this debasement policy has been going on for decades, but in general, the markets have been asleep and just following the headline news from the major news sources, and the inflation figures put out by the BLS. But in fact, there's been a currency debasement policy that's been going on for decades, as the monetary policy or currency policy has been run at a very loose level, while the de facto, or the de jure or actual inflation rate was running 5% or more, but stated to be 2% or 2.5%.
Yeah, no, I agree with that. And we spoke earlier, or you told us that one of the raison d'etre, one of the re reasons for the LBMA being created was to make sure that the bankers and the money printers controlled, kept the price of these monetary metals, gold and silver, under control. And I think up until now, I guess they did a pretty good job, but it looks like they're losing control of the silver rigging of the price. And we saw as well, David, earlier this year in January, they had problems with the gold market as well, the LBMA. Their spot cash contract for delivery usually takes 2 to 3 days, but they had a 4 to 8 week delay. The
Yeah.
deputy governor of the Bank of England said it was because gold is heavy and that
Yeah.
there was a lorry or a truck blocking the vaults at the Bank of England. So I've got a couple of questions in relationship to what I've just said. The first one is, do you think this is like the end of this rigging game since 1987 of keeping precious metals under control so that people think fiat currency is worth something? And number two, do you think gold is next? Even though gold, of course, there seems to be a lot more supply because a lot of central banks hold this stuff so they could lease it.
Yeah, so I think the one-way bet um, that was made that people would forever be happy holding digital promissory notes as opposed to requiring delivery of the physical bars is now been shown to be false. Does everybody see it? No, but enough are seeing it that they are securing possession, ownership, and possession of these underlying assets which have been levered into the market. So I think it's a rolling, I think it's always a rolling process. There are times where you can say, well, it failed here. Um, I think the fact that the market locked up on Friday and had zero physical delivery or sorry, liquidity is a sign that the market is openly in a failure process. And I can't help but think of the old line that it's all over but the crying. Um, the this you have to suspend disbelief to hold these contracts, and it appears that this suspension of disbelief is now failing. And the evidence for that is the lack of metal liquidity, the soaring lease rates, the price backwardation, where the cash market in New York and in London, the cash price for the metal exceeds the futures prices going out to a year. They're basically ignoring the futures market. And the cash price tells us that they're saying we just want the metal now. And for whatever reason, we just want the metal. And by the way, one note here is that the idea that you could have an industrial or a quasi-industrial metal um, like silver and believe that you knew the supply demand dynamics for decades going forward and that they would never invert in terms of demand versus supply it it's completely foolish and it's been shown to be so especially in the last couple of weeks here in the London market.
And as it pertains to gold, do you think they could have a tough time? I'm of the opinion that it's possible, despite the fact that central banks hold a lot of gold and they could lease it. But I
Yeah.
think they're just as leveraged. So maybe you could also explain to us how, because sometimes analysts for the bullion banks, the people that have like try to discredit people like you and me, they say there's always enough metal, but maybe you
Mhm.
can explain to the viewers why right now there isn't enough, basically because they've written too many promises, right? Maybe you could explain that mechanism and whether you think gold is going to be next.
Right. Well, I mean, we can see by the implied lease rates for gold, sorry, for silver, platinum, and palladium, these three metals, that the lease rates are surging in these and above 10%. And, historically, when there's been a plentiful supply of physical metal in the London market, that the implied lease rate would be of the order of maybe 0.5% or sometimes even negative, an implied lease rate of, at a negative level. But what we're seeing now is that if you've got, let's say, 2% of your metal for all of the contracts that you've issued for immediate ownership and immediate delivery, which is immediate is 2-day delivery in London. If you've got a leverage ratio of 100 or 200 or 300 to 1, it's a pretty thin veneer of metal that you need to burn through before those paper contracts are just shown to be, just digital artifacts. And we are now at that position, Mario, where we've seen that in the silver market. Yes, the central banks do lease gold into the market to meet liquidity crunches. But I think at an increasing rate, the central bankers are going to realize that the fiat currency that they issue is rapidly becoming recognized for what it is. Thus the debasement trade, and they're going to recognize that it may be not possible in the future for them to recover their gold that they've put into the market, irrespective of how much of their unlimited currency digits that they offer to get the metal back. So yes, the lease rate, implied lease rate for gold is lower, and gold is not currently in backwardation in London in terms of the price structure of the cash being higher than the futures market. But I think that's just it's just a question of math. And by inspection, we can see that the leverage in all of the precious metals, the four precious metals traded in London, dictates that these markets are heading towards an upending.
Yeah, and you're talking about leasing gold and that the central banks they're becoming more and more careful, I guess, and also repatriation is another thing that doesn't help New York nor London. I think there's push for the Germans and even Italy to repatriate its gold.
Mhm.
Um, and yeah,
It's the sorry for interrupting, but
yeah,
it's the old saying, I'm not interested of return on my capital, but return of my capital.
yeah,
And
that's right.
if you look at gold or silver or any of these precious metals as the capital, at some point these currency issuers are going to want their real capital back, which is gold and silver.
Yeah,
And parenthetically, by the way, it is interesting that these central banks are buying gold. Now they're talking about starting to buy silver. And it is interesting that these creators of fiat currency are buying the things that they scorned.
yeah.
So what is the message there, right?
Maybe they see the writing on the wall because, I mean, for the Fiat regime to continue, you need ever growing debt, and we're like at I think 330 trillion or so worldwide, and I
Yeah.
think they see the writing on the wall. And just to before we conclude. This is a little bit different topic, but it's still to do with gold and leasing. It's to do, yeah, and it's to do also with Fort Knox and the audit for the U.S. because there's a lot of talk. The U.S. wants to issue gold-backed treasuries next year.
Mhm.
We've had Judy Shelton, who wrote the book Good as Gold, proposing these things. I've had her on the channel, and there's talk about revaluation of the statutory price. Even an economist wrote for the Federal Reserve Board, I think back in August, an article about it. So, do you think the U.S. Treasury could possibly be repatriating a lot of the gold that they leased out over the decades so that they can do an audit? And maybe that's why they haven't done an audit, even though they mentioned audits, I think back in January and February.
Yeah, I mean, Ron Paul said it best about a decade ago. He said that there's been no real audit of the U.S. gold reserves done since I think 1955 was the date. And he said that if they had the gold, they would have audited it, right? And I'm not talking about a cursory annual audit in terms of looking at the books and saying, what are the numbers, but taking up 1% of the bars and drilling them out and assaying them and doing a proper audit as you should with these precious metals holdings. As far as a gold-backed treasury, I mean, what does that mean? That you can get gold for the treasury? Because I think that's unlikely, given that total U.S. debt in the total system debt is around 350% or 320% of GDP now, versus the annualized, or sorry, the prior debt versus GDP holdings of about 150% in 1980. So there's just so much debt now, and the economy has been so misshapen with loose money for decades, the speculative activity and the misallocation of resources in the economy that the economy needs a real shakeout now in terms of wiping out the speculative, unproductive activity that's in the economy. So I don't think that this idea of a gold-backed treasury, like what does gold-backed mean, right? Can I have my gold? That's one thing.
Yeah, I mean, I've read the book and I've spoken to her in an
Hmm.
interview, and you're only gonna be really allowed to demand the gold at the maturity of the bond. So if you have a 5, 10, or even a 50 year that they want to
Hmm.
do, what's the point?
Hmm.
I agree with you, but yeah, well, my point was, would they need an audit to prove to investors that the treasuries are backed by real gold, or they probably don't care?
Hard to say, but I mean, if you take a treasury backed by gold, in air quotes, the currency issuance that's going on right now and the pyramiding of the debt, that more and more debt is required to keep things going on an annual basis. Um, I wouldn't really have a large comfort in holding a 30 or a 50-year treasury note, even if I was promised that I would get gold at the end of that cycle. So I don't see that as a solution.
Yeah.
Like gold money is a solution. Silver money is a
Yeah,
solution where it
no,
actually
I agree with
circulates.
that as well. And
Yeah.
I'd want to be able to go with my bond and take delivery of the gold anytime.
Hmm.
So
What is being destroyed, Mario, is trust, right? That is what is systematically being destroyed in the markets right now. With the creation of this promissory note gold and silver market in London, ultimately what they're doing is eroding and destroying citizen trust in these market institutions. And it's done by the central planners. It's done by those who own the central planners. And it's a system of systematic impoverishment of citizens that's got taken place over the last 40 years. While loose currency policy was operated and financial assets in the markets were sent to the moon, even real estate was sent to the moon. Wages never kept up with the true currency debasement that was going on. And so the people who lived day to day and month to month, who didn't hold large amounts of financial market assets or instruments, had their wealth stripped from them, and they became on a rolling basis became increasingly impoverished by the operation of this scheme.
yeah, no, I agree 100%. And hopefully this scheme is on its last legs. It's difficult to say what is going to evolve from it, but for me, David, one thing that I do as an individual is try to stack as much physical gold and silver as possible
Mhm.
because, yeah, I think if things get really chaotic and there's monetary mayhem, gold and silver never fail. Is that the way you see things too, I guess?
Yeah, it's a 4,000 year history of money in terms of physical gold and silver. Um, it's inevitably turned to during a currency crisis. I mean, Venezuela, they had the Bolivar crisis there, and you could buy a month's food supply for a person for one silver ounce, right? And it's happened countless times, whether it was the Weimar Republic, it doesn't matter. Wherever these currency crises, wherever these currency crises occurs, these fiat promise currency systems fail. Is that gold and silver are waiting to take their rightful place as trusted media of exchange and savings.
Yeah, and I saw recently, David, a little clip of a supermarket in Venezuela where people pay in gold grains, like
Yeah.
dust, gold dust, and they they're really good at weighing it and knowing the price. So people think, oh, you can't use gold, but when necessity calls, I think people will learn very quickly.
Yeah.
And lastly, do you think there is salvation for the LBMA, or this is it? This is the complete loss in faith and confidence in the LBMA, which I think it would, even though people might think, oh, it's in London, but I think it would be the loss of faith and confidence in the whole fiat dollar system.
Yeah, it's like how do you replace trust when it's lost, right? And
Yeah,
I think I think the I think the metal flowing out of London is telling us that enough of the participants in the London market are recognizing it for what it is, and they're removing their assets.
yeah,
So yeah, it's trust is it's a very, very slow recovery curve. It's stepwise downward change and gradual, very gradual recovery. Takes decades, and they don't have decades in London when
no,
they're over leveraged by hundreds to one,
yeah.
right? They don't have decades.
Well, it's even debatable whether trust and faith in London as a bullion and foreign exchange center will ever come back in our
Right.
lifetimes. So,
The entirety, yeah, its entire role as a financial center is in play.
yeah, and I think you said that recently in one of our interviews
Yeah.
a few months ago. Anyway, David, I won't keep you any longer, and I'd like to thank you for your time and wish you all the best.
Thank you, Mara. Good to talk again.
Nice talking to you. Take care.